welcome everybody, those online and those in the room. People are still joining. I can see the attendance number going up, and of course people are trickling into the room. So we have a full program today, so I thought, and we only have an hour, so I thought we should just kick off with the launch of this report and discussions around some of our findings and discussions around future areas of work. So maybe we can go to the agenda on the next slide. So we have with us today our colleagues, Corley from the UNSSE, and we have Andy and Matt, who are our partners from FAST and Walk Free, who worked with us on the production of this report, who will present the main findings. We're also pleased to have a message from the Stock Exchange of Thailand, which is a pioneer in this space, has very good examples to share. And then, of course, we're very honored to have with us some high-level discussants who will give us their thoughts and reflections on this report. They were not involved in writing it, so they have an objective view on it. Hopefully they have nice things to say, but we welcome your feedback on how we can improve this work in the future and other areas of work that we can pursue that are complementary. I'm not sure how much time we'll have for Q&A at the end, but if we do have time, we're happy to have a discussion. Obviously, the people in the room with us today, you have an advantage, but those of you online, I do encourage you throughout the webinar to please make use of the chat function. You can post questions in the chat function at any time, and if they're targeted at a specific speaker, please let me know so that we can indicate to that speaker that they should reply. I'll be happy to bring that to their attention. And otherwise, if it's a general question, we'll allocate it based on whoever wants to jump on that question. So with that said, I think we will kick off with our first speaker. And I would just like to talk a little bit, just an introduction of the Sustainable Stock Exchange Initiative. The Sustainable Stock Exchange Initiative was founded by UN Secretary General Ban Ki-moon in 2009. We are a UN partnership program organized by UNCTAD, UN Conference on Trade and Development, the UN Global Compact, UNEP Finance Initiative, and UN PRI. We've got one of our colleagues from UN PRI here with us today. Glad you can make it. We work with stock exchanges around the world. We have over 130 members. And we work with them to help accelerate their journey on sustainable finance, including the financing of the SDGs. So with that brief introduction, and I'll let my colleagues from FAST and Walk Free introduce themselves when they speak. Let me just follow my colleague Corley to make her intervention. Corley, if you want to unmute your mic, the floor is yours.
Thank you, Anthony, and good morning to everybody online and in the room. I'm sorry I cannot be with you in Geneva, but I dare say that the nice summer weather in Johannesburg is perhaps a little more pleasant than seeing everybody walking in with coats and jackets. So we're really delighted this morning to release this document. It is the outcome of lots of discussions and some really interesting research work that we have been doing. So if we can just move to the next slide there. We really believe that this monitor is an important contribution to the conversation. And the conversation is about how exchanges can promote greater transparency on key topics. And the key topic that this market monitor addresses is modern slavery, as you are aware. And as Anthony mentioned, Matt and Andy will present the findings of the research in more detail. But you will see when you read the document, it celebrates the progress that's being made by exchanges in this area. It gives leading examples. We will also hear from Thailand, who is a leading example of dedicated guidance in this space. But it also offers a diagnostic perspective for exchanges to see where they can make a further effort to consider more work in this space. So the monitor itself will be discussed, but we wanted to just give a little bit of a perspective on why are we focusing on ESG disclosure guidance. And if we move to the next slide, you can see here what we have done is from the SSE database, we track the progress that our exchanges are making in their sustainability activities. And one of the areas that we cover in particular is looking at where exchanges are issuing guidance on ESG disclosure, where they're offering training on ESG topics, and a range of other elements which are not relevant to today's discussion. But what you can see here in this snapshot graph is that we've seen a significant growth in the number of exchanges that are offering written guidance for their market on ESG reporting, as well as training on ESG topics, which you can see has really gone up quite sharply. But what I would like to particularly highlight here is the impact that this activity is having, because we're clearly seeing also an increase in mandatory ESG listing requirements, which are often centered around disclosure. And we see a strong correlation between the written guidance that exchanges are offering and mandatory elements then coming through. So guidance in a market is a leading indicator for requirements then. And I think it's, everybody agrees that we are seeing an increase in mandatory listing requirements having an impact in how seriously companies are taking action on various sustainability topics. Training as well translates into guidance, and those requirements and the guidance then translates into action. The requirements that are coming through from exchanges then cements the action into the mainstream. And so, again, just to emphasize that the work that exchanges are doing in providing guidance to their markets really can translate into action to make an impact in sustainability. But the focus then on disclosure, what is the value of disclosure for those that pursue it? And on the next slide, we've highlighted some of the benefits that the listed companies themselves can draw from enhanced disclosure, and the guidance that exchanges offer to them, which lead into requirements, can enable this value proposition and just strengthen it. Firstly, one of the key things that we believe that enhanced disclosure can have as a result is improved management processes. If companies pursue quality disclosure, that automatically requires them to look at the quality of their governance, where to improve their management processes. This enhances their ability to conduct risk management, risk identification, identifying material issues which can then be better managed as well. All of that can translate into operational efficiencies as well as cost savings at the end of the day. What we also see a value proposition of disclosure is that it can improve the performance of a company, both in terms of their contribution to the Sustainable Development Goals, but also in terms of strengthening the investment case. Because research is increasingly indicating that companies that have strong sustainability performance and disclosure offer a better investment case and tend to outperform financially as well. So this is a strong motivator for quality disclosure as well. And then we all know that transparency builds trust, and a social license to operate often is built on trust, and being a quality disclosing company means that you can enhance your stakeholder relationships and trust, not only with your investment base, but also with a broader range of stakeholders. And a topic such as the one that we are discussing this morning is particularly one that relies on those stakeholder relationships beyond investors with the communities in which companies operate. And so we cannot underestimate the value that disclosure can have for the companies themselves, but also for the marketplaces within which these companies operate. And this is why we at the SSE encourage exchanges to provide guidance to their companies, and why the market monitor that we're launching today can also assist them in focusing on a topic that is increasingly becoming important, not only for the companies and where they operate, but also for the way that the financial market looks at these companies. So we celebrate the launch this morning, and we would like to congratulate the exchanges that have been making progress in this space, and encourage those that are not yet making enough progress to really think about what they could do to strengthen their work in this space. And the Market Monitor offers some ideas for how they can do that. So that's my little intervention. I will hand back to Anthony to introduce Andy and Matt and take us through the detail of the Market Monitor. Thank you.
Thank you very much for that, Corley, for stressing these high-level issues related to disclosure guidance. Stock exchange disclosure guidance, as you said, is a leading indicator for where regulatory trends are headed. This is why it's important. And also emphasizing the important role of training. You can pass all the rules you want. If people don't understand what those rules are or how to comply with them, you will have very low compliance levels. We've seen that throughout the market, and exchanges have a long history of providing market education to participants. So they do play a key role in helping to set these market norms and also to promote adoption and implementation of various guidelines and rules. So with that, we'll go on to our next speaker, which I think is you, Andy, and you will walk us through some of the more detailed findings of this new publication, which, by the way, this publication is available online right now. We'll drop a link into the chat, or you can just go to the SSE website, click on the Publications tab. It's right at the top. So, Andy, the floor is yours.
Thank you, Anthony. Thank you, Corley, for the welcoming introductory remarks. Thank you all for joining us today. My name is Andy Shen. I'm the Government and Multilateral Organizations Lead. I should also add stock exchanges to that as well. I cover that area for Finance Against Slavery and Trafficking, which is a multi-stakeholder initiative managed by UN University Center for Policy Research, which is based in New York City with a think tank of the UN. A couple of years ago, FAST, Walk Free, and the Stock Exchange in Thailand in 2021, we partnered together to produce the first and as yet only dedicated modern slavery guidance for listed companies, focusing on the issues of modern slavery, how to report on them. And that was, I think, a really illuminating exercise, and I think a very useful product that resulted from that collaboration. And now, a couple of years later, we're now partnering with SSE as well, and we produce this Market Monitor. And so before I get into the findings of the Market Monitor, maybe I'll do a brief overview of modern slavery for those who are less familiar with the concept. So modern slavery is an umbrella term, a concept that is not legally defined in most jurisdictions, but it's been used to communicate situations where coercion, threats, or deception are used to exploit victims and undermine or deprive them of their freedom. It may take the form of forced labor, human trafficking, that works from the child labor, debt bondage, or slavery, and other slavery-like practices. It's referenced in the UN SDG Target 8.7, which calls on member states to take immediate and effective measures to eradicate forced labor, modern slavery, and human trafficking, and worst forms of child labor by 2030. The latest global estimates of modern slavery by the ILO, Walk Free, and IOM, which was published last year, found that 7.6 million people working in forced labor on any given day in 2021. So we're actually not making progress, but regressing in our efforts to achieve SDG Target 8.7. So as an overview, and many of you here are here for the UN Forum on Business Human Rights, are very familiar, obviously, with the corporate responsibility to respect human rights. But the guiding principles state that business and enterprises have a responsibility to respect human rights in their operations and in their value chains. And this includes, of course, the right to freedom from forced labor and child labor, which are fundamental rights that have been codified in the relevant international labor organization conventions. Publicly listed companies are also increasingly regarding modern slavery as a financially material risk disclosed in their sustainability reporting. This is reflected in the various laws that have emerged over the years that impose potential legal liability or significant operational risk for companies. These include forced labor import bans in North America, also being considered in the European Union. And also, of course, we know that mandatory human rights due diligence legislation has been enacted in numerous countries, especially in Europe, and also, of course, with the EU considering the Corporate Sustainability Due Diligence Directive as we speak. This is another emerging legislation that will pose regulatory requirements to companies, not only in the EU, but also their suppliers in other jurisdictions around the world. And also, lastly, and importantly, investors. Responsible investors are increasingly expecting their investee companies around the world to adhere to the UN guiding principles. So now to, of course, the market monitor that we're all here to discuss. This is a snapshot, I would say, which captures references to key modern slavery-related terms in ESG disclosure guidance documents. So this refers to the 70 ESG disclosure guidance documents, which is considered the universe of ESG documents that's found on the SSE database, and it identifies the extent to which this subject, modern slavery, has been integrated into these guidance for issuers. The market monitor also presents mandatory sustainability reporting regulations, which my colleague Matthew will discuss later, which analyzes requirements to disclose how companies are managing social issues, which include modern slavery. And the market monitor on modern slavery, of course, builds on a previous SSE policy brief that analyzed references to human rights more broadly. So I'll continue. The methodology. So the market monitor reviewed 72 search terms under 4 categories. And we were quite comprehensive, trying to identify what we consider to be the key terms that should be included in ESG guidance documents or dedicated modern slavery guidance. This includes terms under 4 main categories: modern slavery, decent work, supply chain, and remedy. And the specific terms will be shown on the next slide. References that only appeared in citations for glossaries were not counted. References that were to search terms that were outside of the modern slavery context were not counted. And an important example to provide is, for example, CEO compensation under the term compensation came up repeatedly in the ESG guidance, but victim compensation rarely came up. The guidance documents were reviewed in only the ones that in the local language were reviewed by looking for translated terms, and some limitations included, of course, risk of error in translations and variations of the terms that may not have been captured. And here you'll see the search terms that we use, and you'll of course find this in the report itself. And you'll see on the screen, under modern slavery, we have all the forms, key forms: trafficking, forced labor, child labor, debt bondage, also the various elements of these crimes: coercion, threats, deception, etc. Under decent work, we have the fundamental rights at work, of course, freedom of association, collective bargaining. We have references to minimum wage, living wage, the various key indicators of forced labor, like withholding of wages, working hours, excessive overtime. Of course, the latest global estimates also found that withholding wages was the most common tactic used in forced labor. Also, migrant workers are 3 times more likely to be in situations of modern slavery, so that was also a key term we included. Under supply chain, this reflects the UNGPs and the responsibility of companies to respect human rights also in their value chains. So this includes key terms such as procurement policy, ethical recruitment, human rights and modern slavery policy, monitoring frameworks to assess implementation of policies, and under remedy, which is also the 3rd pillar of the UN guiding principles framework. We have specifically for modern slavery, trafficking or labor grievances, remedy, remediation, compensation, restitution, and complaint procedures. And here you'll see a graph that shows the number of exchanges that have made at least one reference to modern slavery related terms in their guidance documents. And you'll see that modern slavery was leading reference among exchanges, followed by labor rights, freedom of association, and coercion. You'll see also in terms of the categories, supply chain and remedy were less referenced than decent work and modern slavery. And at the lower end, of course, withholding of wages was rarely referenced. Living wage, working hours was rarely referenced, and this will be discussed later by my colleague, Matthew. And here are the main findings of our market monitor. So encouragingly, more than half of the 70 exchanges with ESG documents, guidance documents, make at least one reference to each of the categories: modern slavery, decent work, and supply chain. You'll see by far the most references in exchange guidance documents were to forced labor and child labor, and this may reflect the fact that the UN Global Compact principles were commonly referenced in these documents. The UN guiding principles, of course, reflect reference to fundamental labor rights and don't reference explicitly the Palermo Protocol. And of course, modern slavery is not a legally defined term in most jurisdictions. So again, not referenced in a lot of these guidance documents. And as I mentioned, what's concerning is that key terms such as withholding of wages, which is an important indicator of forced labor, migrant workers, which are very at-risk population for modern slavery, are rarely referenced. And policies specifically to modern slavery are only referenced by 14 exchanges. So there is certainly room for improvement in these categories. And the four subcategories that were most frequently mentioned were modern slavery, coercion, labor rights, and freedom of association. Encouragingly, freedom of association was referenced quite often in a lot of exchange guidance documents, but quite unusually, I would say, oftentimes where there was reference to freedom of association, it was not paired with reference to forced labor. And these, of course, are fundamental rights at work, which should be referenced together. And lastly, over a third of exchanges, 30, make at least one reference to remedy terms, such as complaint procedure and slavery, trafficking, or labor grievances. And now I'll turn it over to my colleague, Matthew from Walk Free, to present for the rest of this.
Thanks very much, Andy. Next slide, please, Vanina. Great, thanks. So good morning, everyone. Thanks for attending in person and online today. I'm Matthew Coughlin, Walk Free's Financial Sector Engagement Manager. Walk Free is an international human rights group working to accelerate the end of all forms of modern slavery. We are the creator of the Global Slavery Index, the world's most comprehensive data set on modern slavery. And now turning to the slide that you can see. As a result of the main findings in the market monitor, we were able to draw some initial conclusions or further observations. First, we noticed references to modern slavery in stock exchange guidance documents are focused on mentioning the different forms of modern slavery rather than the underlying conditions of modern slavery. Consequently, we think that it might be useful for exchanges to provide more detailed guidance on specific practices or other warning signs that can constitute modern slavery and are crucial for companies to assess and address. Secondly, the references to supply chain related modern slavery terms largely concern risk management instead of monitoring frameworks. Monitoring is important to determine if actions taken to manage risk are effective. And then lastly, in terms of our initial conclusions, we observed that many guidance documents mention social issues only in the context of listed company operations, not their value chains. And as we all know, the UNGPs hold that the corporate responsibility to respect human rights extends to value chains. Next slide, please, Vanina. At the same time, stock exchange guidance documents do not exist in a vacuum. Capital market regulators, including stock exchanges in some jurisdictions, are increasingly mandating sustainability reporting, as Corley mentioned before. These regulatory or rules-based mandates can require disclosure of social issues such as human rights and modern slavery. These requirements can then shape the ESG guidance itself. In our briefing, we have provided 5 mandatory sustainability reporting examples to assist stock exchanges consider the broader regulatory environment for guidance. The EU Corporate Sustainability Reporting Directive requires EU-listed companies to report sustainability matters using the forthcoming European Sustainability Reporting Standards. The ESRS specifies social and human rights disclosure, such as working conditions, working time, adequate wages, freedom of association, and collective bargaining. In 2022, the main board listing rules of the Hong Kong Stock Exchange set out mandatory and Complier Explain ESG reporting requirements. The Complier Explain requirements include social aspects such as employment, labour standards, and supply chain management. Notably, the disclosure requirements for labour standards request information on policies and compliance with laws and regulations to prevent child and forced labour. The indicators for this disclosure are descriptions of reviewing employment practices to avoid child and forced labour and eliminating such practices when they are discovered. The Securities and Exchange Board of India introduced new ESG reporting requirements for listed entities called the Business Responsibility and Sustainability Report in 2021. The BRSR establishes a reporting framework for the 9 principles of the National Guidelines on Responsible Business Conduct. Principle 3 of the guidelines indicates businesses should respect and promote the well-being of all employees in their value chains, while Principle 5 states businesses should respect and promote human rights relevant to modern slavery. In Thailand, which we'll hear more about in a minute, the Thailand Securities and Exchange Commission introduced the One Report in 2020 to streamline annual reporting for set listed companies. The One Report requires disclosure on business value chain and ESG information, including respect for human rights in line with the UNGPs and Thailand's National Action Plan on Business and Human Rights. Specifically, it mandates listed companies to report performance and results on social aspects, including human rights protection throughout the value chain, such as fair labour practices. And then our final example is from Turkey, where the Capital Markets Board required annual reports to explain compliance with the Sustainability Principles Compliance Outline. The social principles in the outline address human rights and employee rights, including establishing a corporate human rights and employee rights policy covering the UDHR, relevant ILO conventions, and national human rights laws and labour laws. Next slide, please. In closing, we have also provided recommendations for stock exchanges or future areas of work. Exchanges might wish to start conducting risk assessments of the companies and industries listed on their markets to understand their exposure to human rights risks, particularly for modern slavery. These risk assessments could inform us if existing guidance needs to be expanded or if dedicated guidance needs to be developed. Our findings on modern slavery references could help such risk assessments. Moreover, if exchanges decide to expand existing guidance or develop new guidance, our monitor could assist identifying key topics for strengthening or incorporating if they are missing. For example, modern slavery elements and indicators, positive indicators and red flags for other fundamental rights at work, such as freedom of association and collective bargaining, good risk management practices for employees and suppliers, and finally, remediation frameworks, grievances, and the remedies provided. So Walk Free and Fast are available to support stock exchanges strengthening their ESG disclosure guidance documents in line with international law standards and emerging good practices. I'll now be handing over to Narirat from the Stock Exchange of Thailand to share more about the guidance that Fast, Walk Free and SET published in 2021 and she will present by video recording.
Thank you so much for having me here. My apologies for being unable to join the event live or in person. First of all, congratulations on the 12th United Nations Forum on Business and Human Rights. On this occasion, I'd like to share with you on why the SET, or the Stock Exchange of Thailand, decided to step up and promote human rights and modern slavery risk through the development of the guidance on modern slavery risk for Thai businesses. Also, I will briefly touch upon the guidances and share with you on the progress of human rights practices among Thai listed companies so far. We at the SET believe ESG issues, human rights in particular, are becoming more and more important to business competitiveness and to investors' decision-making. Companies in Asia Pacific are exposed to the risk of modern slavery because of the region's prominent role in the global economy and its high level of vulnerability for modern slavery. Numerous Thai companies, particularly in the manufacturing sector, are labor-intensive. Some need to depend on migrant workers. According to the Thai Ministry of Labor, there are over 2.59 million registered migrant workers in Thailand as of September this year. Some employ a large number of low-skilled workers. According to the National Statistical Office, about 60% of the workforce are low-skilled. Also, Thai businesses are in the global supply chain, so they need to ensure that practices meet stakeholder expectations. Adopting proactive management could not only manage risk, but also uncover new business opportunities. Another key driver is that Thai financial institutions start to include ESG criteria in their risk assessment for project financing or loan offering. The Thai government pension fund and banks start to analyze and engage with investee companies and clients on human rights issues as well. So the SET finds it necessary to ensure all listed companies understand how to identify, address, and report on human rights and modern slavery. However, from our observation, an understanding of modern slavery remains limited among businesses in Thailand. We therefore developed the guidance on modern slavery risk for Thai businesses. Through the guidance, we explain the gravity of modern slavery and explain common modern slavery risks for Thai businesses, as well as the risk assessment throughout the value chain. Also, we show a range of modern slavery risks that are specific to their sector or industry. More importantly, since sustainability reporting has become mandatory, we highlight how a company should disclose on human rights and modern slavery, including controversial issues, grievance mechanisms, and response and remediation across all 8 industries if there is a critical policy breach or a modern slavery incident. This would help promote transparency and allow stakeholders to monitor business conduct and anti-slavery practices. Along with the guidance, companies can also use a modern slavery benchmarking tool that has recently been updated to make it easier to use. This tool can also be used by investors as a checklist to consider modern slavery issues of companies they are investing in. In addition, we have continued to promote a better understanding of human rights and modern slavery issues among companies, investors, and other stakeholders through a series of seminars, workshops, and capacity building programs. In the future, the SET expects to see human rights-related disclosures as common practice in the capital market. All companies should have human rights policy, proper practices, and relevant mechanisms in place. For now, we have seen an increasing number of large caps that are committed to human rights protection. According to the ESG Impacts and Business Showcases, a total of 189 listed companies, accounting for 72 of the total market capitalization, have established human rights policy. 157 out of which have disclosed their policies, and only 130 companies have human rights due diligence in place. The top 3 industries that have been actively managing and disclosing on human rights are services, property and construction, and resources, probably due to high stakeholder expectations and high standard of practices. As you can see, we still need to do more to promote human rights protection and anti-modern slavery as part of social norms. If anyone finds this initiative interesting, please feel free to reach out to me. In this challenging journey, we need to collaborate to make a difference to the lives of millions of people. Looking forward to working with you. Thank you. Thank you so much for
So I think we're back unmuted. We would like to thank our good friend Narirat at the Stock Exchange of Thailand for her remote intervention. And as she mentioned, for any of the exchanges on the call today, if you'd like to learn more about what Thailand did, if you don't already know Narirat and have her contact details, feel free to contact the SSE and we'll be happy to connect the dots. Again, thank you to Andy and Matt for the collaboration on this report and the excellent overview of the findings and recommendations. We'd like to now hear some reflections from people who were not involved in the research but have read the report and who are experts in this area and what your thoughts are on this. And so our first discussant in this space is Surya. If I can give you the floor, we're keen to hear your thoughts and reflections.
Thank you, Anthony, Andy, Matthew, and everyone. Thank you for the invitation. And at the outset, congratulations for this market monitor report, which is definitely a valuable tool in terms of encouraging not only businesses but also investors to take the issues about modern slavery seriously. So that's definitely very useful. I've been requested to speak, Matthew, on one aspect in particular, that is the role of the state. So we're talking about stock exchanges here, but the stock exchanges are also operating within an ecosystem. So we can consider them as businesses, or we can consider them as part of the state-owned enterprises, or they are somehow linked or regulated by governments. So I think what is the role of the states and governments in that particular context within which the stock exchanges are operating? And I will draw on my experience in the business and human rights field. I was part of the working group on business and human rights and this new role on right to development. So I will try to connect these dots in my reflections. So I think the first point I would like to make in relation to the role of the state is that the quality of disclosure, I think that issue already was made, is a key challenge going forward. And I think there could be significant variation about the accuracy of information. Because if different stock exchanges are providing different pieces of guidance, so then the modern slavery disclosure is about what? Is it about merely the operations of the leading company? Is it going to include tier one? Is it going to include all the value chain upstream, downstream? And there could be significant variations in terms of that. So I think that is something we need to keep in mind. And there's already significant criticism of disclosure, let us say in the context of climate change. So I think we need to ensure that when it comes to disclosure in relation to modern slavery, that we are developing standards that are, if not universal, they're standard at least. So we are talking about by and large uniformity in terms of those standards. And those are also in line with not only UN guiding principles, but also in line with the emerging binding norms. And I think Matthew hinted to some of those binding norms in terms of coming out of European Union or BRSR that Matthew mentioned in India. So I think we need to align with those binding norms as well as soft standards. The second point I would like to mention is about accessibility. What is the target audience of this disclosure? Because we are not disclosing for the sake of it. We are disclosing to influence the corporate behavior. And of course, the primary target often is shareholders, investors, including institutional investors. But should we be looking beyond investors and institutional shareholders? I think I will strongly encourage to make such disclosure accessible to, let us say, other market players, consumers, for instance, especially the youth population is becoming a key lever of change. And not merely about modern slavery, but generally about responsible business conduct. So I think how do we ensure that the disclosure that is done is not limited to the website, is not limited to the shareholders and investors, but it is beyond the other market actors that may be using that particular information. My third and the last point about the state role is about incentives and disincentives. If there are certain businesses that are listed, they are disclosing better. I mentioned the importance of quality and accuracy. So if there are certain companies that are doing better than their peers, then what incentives may be available to those companies? And of course, market creates incentives, but the state has a role to play here in terms of creating those incentives? And those may relate to, let us say, public procurement. So we should not see these issues in isolation. And of course, UNCTAD does work in different streams, including public procurement. So how do we link those issues about disclosure to public procurement? How do we link the issues to financing? Can preferential interest rates or loan rates could be given by the banks to those businesses that are doing better in terms of quality and accuracy of disclosure on modern slavery? So I think those incentives, and of course there's a role for disincentives. That's where fine and sanctions and potentially delisting or the issues about misrepresentation and fraud will become relevant, right? So it's a question of having both carrots and sticks on the table together. And then it is for businesses to decide, will they prefer carrots or a stick? I mean, that is the effectiveness of the regulatory paradigm. You don't merely offer carrots. The power of a stick lies in showing the stick, but not using it often. But if you show it along the carrots, then I think it becomes a very powerful paradigm. Let me conclude with the future of work, where this work would go based on my experience. 4 quick points, and I will link with my current mandate on right to development and how there could be potential of collaboration. My first point is that modern slavery is often seen as part of S, not part of E and G. And I would suggest we should break this silo because modern slavery is linked to both S, of course, but also E and G. Because the environmental pollution and climate change as part of E is going to create situations that will result in modern slavery. There's significant nexus there. Similarly, modern slavery is linked to human trafficking, and that is where corruption comes into picture. Often there's a corruption because of that human trafficking and modern slavery is taking place. So we should link modern slavery to also G, governance issues. It's not merely about us. That's my first point. My second point is merely disclosing will not be enough. It is a good start, but we need to look at the business models. Are there certain business models which are inherently problematic and they are enablers of modern slavery? I mean, there was a data about why the millions of people are still trapped and we are seeing regression. We can blame the pandemic for this, but we could also think deeper. And are there certain business models which are inherently problematic? I think as part of my new mandate, I'm just starting a new project on business models. Business models for inclusive and sustainable development. And if anyone has interest, I'll be happy to share that concept note, and we'll be developing policy briefs on business models in this next 2 years going forward. Last 2 points, I'll stop with that. Power imbalances. When we talk about modern slavery, often the issues are about power imbalances. Many of these workers who are trapped, they don't even know about any of the things they're talking about in this room. Right? So how do we ensure, and that's where collective bargaining, role of trade unions, role of CSOs, free media, and all those actors who can bridge that power imbalance would become relevant. So how do we harness the potential of those actors who can work with us and try to help addressing those power imbalances? And my last point is about participation. Right to development, my current mandate, a key component is participation. So when businesses are doing disclosure, who is participating in that exercise of collecting data and disclosing? That is a key component. And I'm consciously using the term participation, not consultation. Because in the BHR space, including the UN Guiding Principles, the focus is on consultation. But consultation often in practice is proving to be ineffective. And it's proving to be ineffective because the power is with the company consulting. So I decide to consult with the people I want to consult on the terms I set, and within a time frame I decide. So I'm controlling everything. And I also decide what information to consider. And that is problematic. And that's where I think we should slowly move towards participation, which is power sharing, recognizing the agency of other actors who we're consulting. It's about co-creating something. Thank you very much.
Thank you very much for that story of all key points. And it's I think it's very important the publication that we produced today, the analysis we've done today, it is intended to be the start of a conversation. And I think you have leveraged that well to focus on some really key points. I appreciate how you are breaking down the silos between the ESG, very valid points there. This analysis, this look at business models that are sometimes inherently problematic or risky. I may want to come back to you on that. The power imbalances, this last point about participation as well. Who's producing the data and the reports? One of the things about corporate reporting too is it's also meant to be the start of a conversation. If you think about traditional financial reporting, investors are meant to query that and sometimes challenge that. So there are questions out there about what forums exist to pick up on these things. Of course, if people are producing reports and nobody's ever querying them or challenging them in any way, then yes, you can have a situation. If nobody ever looked at financial reporting under a microscope, I'm sure companies might lapse into a tendency to write whatever they want to write, you know? So these are all good points. Let me just ask one follow-up question before we go on to our next speaker. Business models, some are inherently problematic. We heard earlier from Matt about one possible recommendation for exchanges that they could do a risk assessment. We know, looking at economies, if you have very large continent-sized economies, they can be relatively diverse in terms of the listed companies, in terms of sectors and so on. Some medium-sized countries, not so much. You know, they can be dominated by 2 or 3 industries. I mean, Switzerland is basically chocolate, cement, and banking. You know, that basically dominates the entire stock market here. And other countries, of course, are focused on other areas. So for some markets, you can imagine there might be more risk than others. Just very briefly, I don't know if you wanted to react to that thought.
I mean, I would suggest that the risks are there in every industry. I'm based in Sydney, in Australia, right? So you may think that the risk in a developed country like Australia, in a city like Sydney, is not there. But if you look at the restaurant business, for instance, in Sydney, international students are trapped in potential situation of modern slavery. So I will not exclude any sector, but the context matters. Let us say if you are a business operating not just in, let us say, I believe Myanmar as an example, but on the border of Myanmar where migrant workers are coming. That is a red flag. Potential risk there higher, those particular situations. The sourcing pattern. Are you sourcing from SMEs, which have no idea about these standards that we're talking about, right? So I think we need to look at those variables, which will vary from country to country, sector to sector. So rather than picking only one sector or one industry, I would say variables we should keep in mind to create those red flags.
Right. Okay, I appreciate that. Thank you very much for that intervention. I'd like to go to our next speaker. There we go. Camila, thank you. Your thoughts, your reactions to this report.
Yeah, thank you for having me here and giving me the opportunity to speak. So to introduce me a bit, my name is Camille Visconti Saint-Julien. I work for a French asset manager called LBPAM, with about 70 billion euros under management and with a global investment universe mainly composed of listed companies. Where we are right now on the subject is we have recently adopted our new human rights policy, the point of which is to basically describe and explain how we intend to integrate human rights due diligence within our investment process and what it means for us to conduct due diligence compliant with the UNGPs and OECD guidelines. And so basically this commitment to UNGPs and OECD guidelines also applies to, and mainly applies to companies actually we invest in, and is an expectation that guides us throughout the entire investment process. So the first step of our due diligence, and actually is close to the conversation you were having, was to identify and prioritize human rights risks and impacts that were salient for us, depending on our portfolio, on the sectors we were investing in, on the countries we were investing in, and basically on the companies we invest in. And so to do so, we conducted a sectoral and geographical human rights risk mapping to understand basically what we needed to focus our efforts on. So we based ourselves on benchmarks, reports from NGOs, the ILO, UN, OECD, and also, and most importantly, maybe in this case, on companies' disclosures, because companies' disclosures and their ability to conduct their own human rights risk mapping and to talk about their, impacts. Well, it was of the essence in the process because it allows us to have a more maybe granular approach and to understand the root causes of the impacts and risks we might be confronted with because of our investments. So it was very important to look for this information, and the more information we could grab from companies, and the more detailed we could be. So this in turn helps us in our everyday processes and investment processes to, well, again, understand root causes of the risks and impacts and adapt our prevention and mitigation measures, which for an asset managers basically relies on engaging directly with companies and questioning what they might say in their sustainability reports or whatever other types of declarations. Exclusion of the worst or those most at risk of being non-compliant with the UNGPs, and quantitative and qualitative assessment and tracking. On this part of tracking and assessing companies' human rights due diligence and their ability to address human rights risk, well, it's one of the most important parts of the human rights due diligence for an asset manager, or at least the baseline for the human rights due diligence. We operate in an investment universe of thousands of companies, basically, with operating in every sector, at least many sectors, many geographies too. So we're basically exposed to all the risks that everybody could have. So it's very important for us, again, to try to have the most, the more data we could on these companies, because it helps us, again, trying to assess their own performance in terms of human rights. So we have developed an in-house quantitative tool to assess companies on ESG matters at large, 6 of which directly concerns human rights in the entire value chain. So fundamental labor rights in the value in the supply chain, in the company's own operations. We have indicators on customers' rights, on communities' rights that could be impacted by a company's operation, etc. So what it means for us basically is that a company with relevant disclosure on its own salient human rights risk will be able to explain the root causes of the risks, or its prioritization strategy, how it implements human rights due diligence, what its mitigation and prevention measures could be, depending on the risks it is confronted with. It's going to have better ratings than a company with no disclosure whatsoever. And so at the end of the day, what it means for us is that they're going to be overweighted in our portfolios, and the ones with no disclosure at all, or with less disclosure, or less impact, or less, at least, prevention measures and mitigation measures on human rights, are going to be either excluded, either underweighted. Sorry, I'm a bit, I need to go through everything I'm trying to say. So as such, stock exchanges, guidances, and transparency efforts and regulations are very important for us in 2 ways. So first, it helps companies understanding that what third-party stakeholders, so investors and other people, can expect from them in terms of human rights and are actually and actively looking for. And the second thing I think is it helps us in gathering more data on relevant information and human rights context in which the companies we invest in operate, what you were exactly saying regarding Myanmar, or companies operating only with SMEs, etc., etc. This helps us understanding what are the red flags and what we should be prioritizing in our own assessments. So it is of the utmost importance. Overall, what we have seen over the years is that companies that are operating in countries where either stock exchanges or regulators were requiring specific disclosures on human rights or human rights due diligence have generally progressed in conducting this due diligence and addressing human rights risks. So one example I could give on this is we manage a fund together with an NGO, international NGO specialized in human rights, the goal of which is to basically promote companies with the best practices in terms of addressing human rights risks. And for this fund, the NGO selects companies on a thorough analysis of their human rights practices to integrate the universe, like the investment universe. So they're the ones who select them. And although the investment universe is reduced to certain geographies and certain sectors, what we have seen is that companies located in countries that have had regulations or laws on vigilance or on human rights due diligence or modern slavery and transparency overall tended to have best practices and were overweighted in the investment universe of this fund. So it is something that tends to prove that overall there's a good evolution, and the more we tend to ask for disclosure and transparency, and the better the practices get in the long term. And the obstacle we might now face to conclude, and I think it is quite close to what you were saying actually, is that these guidelines and regulations sometimes tend to focus on steps of human rights due diligence rather than on the content and the objectives of human rights due diligence. And so what we see right now is more and more companies being able to provide us with extended human rights risk mapping, very granular human rights risk mapping, very granular prevention measures and attenuation measures, but not being able to explain the link between the two and how they prioritize their side in human rights issues and how these specific prevention measures might actually be efficient to, target and address this kind of issues. So we kind of see that we're a bit confronted to basically human rights due diligence being reduced to a tick the box exercise by most companies at the moment, where steps and commitments are taken because they need to be taken, but they do not necessarily, translate into efficient measures to address human rights risks and impacts. So I think the work conducted by the Stock Exchange of Thailand, Walk Free and Fast, can be of importance for us, again, as I think it allows companies and investors to better grasp the essence of what human rights due diligence is, to grasp the root causes and impacts, and therefore the best practices that you could have to address this. So as investors, to conclude, we need and welcome all new regulations and guidances on these points. Basically, we try to engage as much as possible with companies to make sure that these regulations have their intended effect and do not, basically end in being a simple tick the box exercise. And as such, we celebrate the launch and thank you for the launch of this new report on stock exchanges, which I think is going to be brilliant.
Thank you very much for that intervention, Camilla. We're getting right up to the top of the hour now, so many of our participants online will have to drop off. And so we're going to have to wrap up the meeting soon. But of course, for all of us here who are physically in the room, I encourage you, we can continue the conversation just a little bit longer. Camilla, so some of these points that you raised, I think they relate to also other areas around sustainability reporting about sort of challenges of tick the box versus deeper applications. And we've seen that in other areas. And to some extent, it can be an evolution where you have to start somewhere.
Yep.
And of course, reporting, as we said before at the beginning of the conversation, in your own engagement with these companies, are you tracing this evolution of practices?
Yeah, it's the point of engagement. So we engage for three main reasons. If I had to basically sum it up, first one would be there's a huge human rights impact or environmental impact that we've identified and we need to discuss before the risk actually materializes into an impact. And the two other things would be, we think that the human rights due diligence within company or environmental due diligence within company is insufficient. And therefore, we need to engage in the long term with the company to bolster their own practices and build them up. So we track those engagement when we are too small, because I know that 70 billion might seem to be a lot, but it's like not that much. So we're not that big. So sometimes we need to find other investors to help us because they're probably more important than we are for certain companies.
Yeah.
So we also work a lot on collaborative engagement with other investments to push for the best. And so we try to, again, see this evolution. And in the long term, we see it. Like the ones we've pushed generally tend to improve their practices. So it takes a lot of time. It's baby steps generally, but it can really be useful. Also, the difference, I think, and what can be of importance is that investors at the end of the day are more, I wouldn't be able to explain why, but we have less issues to discuss with maybe NGOs and other stakeholders. It seems like the discussion is a bit more open because we do not have direct impacts in terms of equities and bonds. And so we are also a good medium and nexus for companies to access to maybe other stakeholders. And what you were saying is that in that case, the companies do not control the consultation they're having with the stakeholders in question because we are bringing them to the table also. So this is a very interesting way of engaging with companies. We've been doing it with Access to Medicine and the Access to Medicine Foundation in the Netherlands. We're doing it with Rating Digital Rights, which is an NGO on basically freedom of expression and privacy. We are also currently doing an engagement with a Swedish NGO called ChemScore on forever chemicals. So, I mean, this brings to the table the opinions and the needs of other stakeholders than just us investors, which I think is very pertinent in the long term for companies to evolve.
Okay. Thank you very much for that. We are just over the top of the hour. I did people online if you've got to log off, or people in the room if you've got to run to another meeting. But just before we close the meeting, I did want to open the floor to people who are in the room with us today. If anybody has a question or comment about this report, you want to jump in. In particular, I might invite my colleague Davide from UNPRI. Not to throw you just a little bit in the spotlight, but we did just hear from an asset manager. Of course, PRI, your core membership are asset owners and asset managers, and you have thousands of them. And so you might have some perspective on their experiences and their journey working on due diligence issues related to human rights, and of course their need for more and better data in this area.
There is absolutely no doubt about that need and the work of various initiatives, the work of standard setters, the work of stock exchanges is certainly very important to provide data that is reliable and as harmonized as possible, because that is definitely a need. Because in the moment when you have very conflicting data on these issues that is not standardized, it becomes very complicated to take action. The other action that investors are taking and could carry on taking, that Camille just hinted at, is collaborative engagement and initiatives such as Advance. I don't know if you know about it. It's the recent collective engagement initiative from the PRI, focused on human rights, focused on issues connected to modern slavery. It allows investors, it brings together investors for collective engagement with a number of companies on a number of sectors, on a number of topics. So,
thank you very much for that. And so with that, I think we're at the end of the meeting now. Everybody, please feel free to send us feedback on the report if you have thoughts. And of course, we're always happy to collaborate with people on future work in the States. Thank you, everyone, for joining.
Thank you. Really loved what you said. It was in you're fine. Oh, no worries. That was so much fun.